Hey everyone, Coach Investor back to another video for today. So as promised, here's a video about PayPal, the bear case. Now we're going to focus on an article, a piece that was written here on Seeking Alpha by LEL Investment LLC, PayPal. New CEO, old problems, rating downgrade. Of course, that writer has a sell rating on PayPal because of the things that were mentioned in that piece. Now I already did this kind of video on Palantir on a more positive note. If you missed that one, it's going to be in top right corner. This episode is sponsored by Seeking Alpha. You'll get 30% off your Seeking Alpha premium subscription. If you go and click the link down in the description, you have until December 6th to enjoy that promotion. So why wait? Now, full disclaimer, I have a position on PayPal, a long position on PayPal, because I do think that right now the risk reward here is incredible. But throughout this article, the writer does raise some good criticism, but overall I will add a lot of counterpoints to his claims. So let's start. He starts off with naming a couple of bullet points here. So PayPal experienced a decline in its user base in Q3 2023, raising concerns about its future growth and competitiveness. The company faced a significant contraction in transaction margins, with projections of slower revenue and profit growth. The new CEO's turnaround strategy lacks a clear value proposition and does not address declining user growth and contracting margins. PayPal faces strong competition from credit card companies and mobile payment processors like Apple Pay, and its crypto business has shown limited growth potential. I know some of you are probably already triggered by a couple of these claims, but hey, let's go and read through it. So I first start off with the overview of PayPal's recent performance. So PayPal reported the third quarter earnings on November 1st, 2023. Analysts welcomed PayPal's new Chief Executive Officer, Alex Chriss. Investors seem to have high hopes for Chriss' turnaround strategy for PayPal. PayPal's stock price has gone up by 12% since the earnings report, but the stock price was still down 36% compared to 1 year ago. Of course, we know fintech stocks in 2023 have been hit harder than other stocks out there. Inflation, high interest rates do these things to fintech stocks. I do think that 2024 will be a much better year for all fintech players. Now, the thesis to sell PayPal stock. We initiated the rating for PayPal in August as neutral, as we saw the risk and reward were balanced at that time. I mean, in my opinion, since then, the things haven't really changed that much, but okay. But in Q3, PayPal's fundamentals deteriorated and its initiatives like cryptocurrency have not shown promise. As you can see, the risk now outweighs the reward. This is completely false, by the way. I mean, if in August you had a neutral rating and now you have a sell rating based on just 1 quarter, then you have not been paying attention. And by the way, the crypto business, right? The stable currency, let's call it, that PayPal has launched. Maybe I'll do a completely other video about that, or maybe I'll invite Crossroads. If you watch that video, I'll send you a DM. It's still too early to say if that's a success or a failure, but he talks about that a bit later on in this piece. PayPal's user base declined in the third quarter. Its transaction margin was heavily contracted during the third quarter, a lie again. The company projected slower growth in both revenue and profit in the fourth quarter, along with worsening margins. This had a short-term negative impact on the business. The real long-term issue is PayPal's lack of a clear value proposition for its customers. The company faces strong competition in the payments industry from credit card companies. PayPal's user acquisition channel Venmo also faces challenges from strong mobile peer-to-peer payment processors like Apple Pay. We don't believe PayPal's 400 million total users or 85 million Venmo users give PayPal a competitive advantage. Let me repeat that. We don't believe PayPal's it's over 400 million total users or 85 million Venmo users give PayPal a competitive advantage. This is the most ridiculous thing one can say. How can 400 million users not be a competitive advantage? That's close to 500 million, right? Larger than a lot of countries. Its low valuation seems more like a value trap rather than a real bargain to us. We believe the new CEO has not set up a solid turnaround strategy to stop PayPal's decline. We recommend investors sell PayPal stock. The CEO has had what? not even a quarter the time to do something and you reach such a conclusion already. Again, not really a serious claim. Moving on to financial reviews. So we can see here PayPal's total payment volume that continues to go up, but then here, PayPal total active accounts have come down for the last couple of quarters. Now, this has already been mentioned by the previous CEO that during the pandemic, they added a lot of accounts that were really not valuable for them, actually costing them money, because those accounts do one transaction and that's about it. So your cost of acquisition here is higher than those that transact weekly or a couple of times a week or a couple of times a month. So again, you're going after quality and not quantity. More on that maybe a bit later on. Then he talks here about PayPal's revenue that only increased by 8%, but its transaction margin decreased by 560 basis points compared to last year. However, the company was able to grow its operating income by 4.5% due to the heavily cutting costs by laying off operational staff. So here again, he makes a comparison year over year, yet he goes from neutral to sell because of a quarter-over-quarter change that he did not like. So let me go and look at the actual numbers and show you something interesting. So if we go on this page right here from the press release, we can see active accounts. Yes, it's true. It is down 1% year over year. But what happens here? Number of payment transactions. Current quarter versus prior quarter, we're up 3% here. And then from the same quarter last year, we're up 11%. So despite having less accounts, we're having more transactions. Interesting. Very, very interesting. As you can see right here, payment transactions per active account increased 13% year over year. So again, that claim goes out of the window. Then with regards to transaction margin, it is true, year over year, we are down quite a lot. But as you can see, we are now, yes, down quarter over quarter as well, but we're only down 0.5%, which means the bleeding is probably close to being done here with regards to transaction margin. And as always, the markets are forward looking, not backwards looking, not looking at the fact that 3 quarters ago, the drop quarter over quarter was extremely big. No, we're looking at what is happening right now. Right now, we can see that they're getting this under control. Right now, we're also seeing, yes, less accounts, but more transactions. Isn't that supposed to be a good thing? Apparently not enough. Moving on here to transparency and reporting. As they mentioned in the last earnings call, we're going to get more numbers in the next earnings report. So importantly, we are committed to increase transparency and improve consistency in how we discuss our business and the ongoing enhancement of our disclosures. PayPal has 3 customer bases: individual customers, small businesses, and large businesses. Of course, now with Alex, Chris, with the new team, we're going to get a lot more focus, small to medium-sized businesses as well, and especially connecting the whole ecosystem. Venmo still needs to be very much connected to the PayPal system. Here he continues to talk about the fact that, declining consumer accounts will reduce PayPal's negotiations leverage with merchants, but as we've just seen, there are more transactions, and you're not going to transact more if you don't really like the service, right? Unless you're ignorant, but okay. Then, market position and competition. So branded versus non-branded transaction. The management mentioned that PayPal's margin contraction was driven more by increased transaction volume from Braintree versus branded transaction. We know this is true. This is not something new. This is a red flag to us because branded transactions refer to individual customers who actively choose PayPal as a payment option, while Braintree transactions are non-branded. The difference between the two for PayPal is that PayPal charges higher fees to merchants on branded transactions compared to non-branded Braintree transactions. This signals that individual customers are now using PayPal less often as their preferred checkout option. The shift towards more Braintree volume means PayPal is processing more transactions where they earn lower merchant fees. This mix shift is concerning as it indicates declining engagement from PayPal's branded consumer base, which is critical for the long-term competitiveness and margins. Again, Braintree is growing much faster than, let's call, the legacy PayPal business. We've talked about the lower margin of that business. We also talk about the fact that they're now in a position where, maybe that margin can be improved. And again, you see there are more transactions now than before. He then talks about Apple Pay versus PayPal. We've talked about that before already, and I'll say this again and again. Not everybody on this planet owns an iPhone. Okay, the most popular actually operating system is still Android. So there is that. Then he talks here about Venmo and iMessage. And by the way, as a non-iPhone user, I didn't actually know that this was still a thing. So you can actually send money through iMessage. If you're one of those users that do this, please let me know down in the comments below. But he does say something interesting here with regards to that. The huge disparity between Apple's users and Venmo's makes it unlikely that Venmo can compete as a top peer-to-peer payment platform long term. I mean, the numbers don't lie. Venmo is becoming more and more popular by the year, and Apple Pay and Apple as a company, the iPhone is nothing new. So yeah, again, a claim that is not really backed up by facts. How many of you use Venmo even though you have Apple Pay? Probably a lot. Moving on to the new CEO's approach and data strategy. So let me touch briefly on our evolution to operating as a platform company. Our ability to seamlessly delight customers end-to-end is a function of the quality of our technology and data platforms, which are very strong. But we have a significant and important opportunity to further become a platform company that builds company-wide capabilities, accelerates at scale, and drives efficiencies across the organization. He then shows off his love for Apple, talking about how Apple handles user data much better than the rest, etc., etc. So the key difference is Apple Pay emphasizes privacy and minimizing data collection. Now, by the way, remember what happened with the Apple privacy update that hurt a lot of advertising companies such as Meta, Snap, Pinterest, and stuff like that? Remember what happened then? Suddenly Apple's advertising business skyrocketed. So no, they don't really care that much about your privacy. They care a lot more about making more money. That's the truth. He then continues by saying, overall, we do not find the new CEO's ambition to transform PayPal into a platform company very compelling at the moment because PayPal is facing increased competition and has a declining client base. He then goes back to the point of guidance, contemplates a sequential improvement in transaction margin dollar performance. That said, on a year-over-year basis, we now expect transaction margin dollars to decline. Again, we've seen the graph, we've seen the difference between the year-over-year comparison, the quarter-over-quarter comparison. There's no point of me repeating that again and again. Here he talks about PayPal's crypto business. I'll just jump to the conclusion here. Overall, we conclude that PayPal's crypto business is unlikely to become a significant growth driver in the near term, given the modest crypto asset balance and minimal stablecoin adoption. Again, this is still something fresh, something new. You cannot make such an early conclusion on this. Then talking about valuation. So in our opinion, PayPal currently does not have a clear and compelling value proposition for customers, and thus its market position is relatively weak. Interesting, because last time I checked, only Visa was a more popular option amongst, I think, 63, 67 countries or so. Quite nice, right, for a weak-ish business. And believe it or not, this is the worst statement that I could find on the internet. He goes back here and actually compares Square, PayPal, Venmo, and then again iMessage. For instance, an average of 41 iMessages are sent daily per user. Venmo sees a much lower usage frequency compared to iMessage. Of course, you're not going to use Venmo to send a message like, "Hi, you're up." No, you're going to use the messaging app, iMessage or WhatsApp. You use Venmo to make payments, not to chat, in my opinion. Then moving on to the conclusion. First off, the valuation might look cheap, but the business appears broken. There's really nothing in the earnings report that show and back that claim that the business is broken. On the contrary, actually. Conclusion: PayPal has started to decline in user base, and we are not impressed with the new CEO's turnaround strategy so far. The new CEO did not even have a quarter to work his magic, and the declining user base, this is something that was already announced a long time ago coming out of the pandemic. They themselves had a new goal in place, going after quality and not quantity. To conclude, this bear case is extremely weak. Yes, we have to look out for improved transaction margins. We also have to look out for improved expense ratios. We do not want to see another year of declining users every single time. But overall, to say that currently the price risk reward here is not making much sense, is actually more on the risk side, is completely bollocks, in my opinion. I mean, these claims that were made are very, very weak for a company right now that is trading at what, 11.5 times forward PE or something like that, buying back $5 billion worth of shares while being valued at around $6.3 billion in market cap. Come on, let's be realistic here. This is an article, this is a bear case that only focused on one quarter and has not really been up to date with PayPal for the last year and a half or so, maybe even more. Of course, I might be wrong, he might be completely right, and PayPal goes down from here. But I do want to hear your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.